English. Today we are going to analyze the basic financials of some popular broking houses. Now you may be thinking why we need to analyze the financials of broking houses if you are not going to invest on that particular stock. But you should understand one thing. Basically, all of us are in the stock market to get returns or to improve your assets. So brokers are the gateway to stock market. So if that gateway is being collapsed, then how you can enter or exit from stock markets? A couple of months back, we did a video on what will happen if your stock broker got bankrupted. If your stockbroker collapse or bankrupt, in that case, if you are a trader and keep some money in your trading account, obviously that money will be lost. How you can retrieve it? Yes, obviously you can retrieve it. Only up to 25 lakhs. You can submit all the relevant data as well as documents like contract notes to Scores website and wait for investor protection funds decision. So that's a time consuming effort. For a trader, the waiting period itself is an opportunity loss. So none of the trader can afford it. So as a preventive measure, what you can do is better we avoid brokers with unhealthy financials. Why should you take risk? If you take risk on certain company which is not financially fit, like some penny companies, the reward is also huge. For example, if a financially unstable penny company of 10 rupee, if you invest, after 1 year it may be 100 rupee. So that reward is huge. But on the other hand, if a broker is financially unstable or stable, the brokerage that you are giving remains the same. So what's the benefit of taking higher risk on selecting broker? So at this juncture only, we are going to analyze the financials of broker. So only select the brokers which has better financials, better financial standing, and has good cash balance. So here, anyway, we can't analyze all the brokers on field. So majority of the brokers which are publicly listed, I'm trying to avoid it because the data of that kind of brokers are easily available around the exchange website or even any of the scanner softwares or even the analytics data also, it's easily available. But the companies which are private limited companies, it may be a bit difficult for you to retrieve the data because that's available there in the MCA website also, but for common public that may be a bit difficult. So that's the only reason or the motivation why I came up with this video, because a lot of people, they used to ask a question like which broker is good, whether this broker is good, that broker is good, or sometimes the selection criteria for a broker is something like, okay, this broker offers 10 rupee brokerage, this broker gives a very good interface. But you should understand one thing, the ultimate or primary selection criteria to select a broker should not be the interface, UI, UX. No, it's not like that. It should not be the brokerage also. The primary criteria to select should be the broker's financial standing. Else, in long run, that will cause a lot of pain to you. That may lead to a lot of financial stress on you. Please understand that last year itself 54 brokers has either surrendered or got bankrupt, though the markets as well as the investors sentiments are booming. Now you just imagine, once the market gets settled and investor sentiments get settled, how many of the brokers will stop their operations? So we shall analyze one by one each. The first one is Zerodha. We know that Zerodha is the broking company with the largest subscriber base. Last year they have posted 1,300 crores of profit. So Zerodha looks good in their financial standing. Moreover, their business models are somewhat very aggressive, including their AMC companies, and a lot of subsidiaries are also there, and different verticals business they are running, including algo and ultra HNI service companies like TrueBeacon. They are very innovative, various way to reap revenues they are exploring. So Zerodha looks attractive and good. Next one is Motilal Oswal. Motilal Oswal posted their net profit as 706 crores in the last financial year. Moreover, they have also some other auxiliary businesses, especially like PMS services and Ultra HNI services with a very good digital backbone. So Motilal Oswal also looks very stable. The third one is Upstocks. They are backed up with a lot of advertisements and everything, but unfortunately, Upstocks they are in a huge loss when compared to the total revenue. They are in a loss of more than 500 crores in the last financial year. So this not gives an appealing numbers to anyone. Though they claims that they have investments of Ratan Tata, but those who claim something like that, please understand one thing: Ratan Tata has investment in more than 700 companies. Among that, Upstocks could also got some share. That's all. Nothing great. Upstock's parent company RKSV Securities, they are a bit notorious for certain allegations as well as charges in the past. A bit of exchange discrepancies are also reported in the past. So it's a better stay away from some companies which are financially unstable. The other broker is Grow. Grow, they are not in loss, but they have a marginal profit of 2.5 crore rupees in the last financial year. Unlike Upstocks, you need not bother much about Grow, but it's always preferred to explore better and bigger discount brokers, especially when none of these kind of companies can offer anything great about the brokerage benefits also. Other one is Angel One, that's a publicly listed company, and they have also posted 700 crores of profit in the last financial year. With a steady increase in profit as well as the margins, Angel looks very attractive. Other one is M-Stock. They are offering freebies to all the brokerage charges like free brokerage, etc., etc. How they can find continuous as well as the recurring revenue from the operations, that's a question. But still, this M-Stock is a part of Mera Asset, which is a parent company, and they have operations worldwide across the globe, and their parent company has a very good standing financially. So you need not bother much about M-Stock also, I believe. One of the popular brokerage house is Fires. Fires, they are offering a very good UI UX for the investors, and many investors they fall in prey of that. Unfortunately, Fires has a current ratio of 0.4 only. That means the liabilities are very huge, and the last 1 year the liabilities has been increased to 3 times. So the Fires fiscals are also not that much attractive. So in short, it's better you stay away from the brokers which has a little or less financial stability. Why should you take unwanted risk? You are not going to get any benefits out of trading through some intermediary which are not financially stable. So choose your broker partner wisely, think sensibly, safeguard your money, and never stress out with your investment partner. Because if you are a trader, obviously you have enough or more stress on trading itself. So don't invite more stress about your trading partner also. So that's all for now. See you in the next episode. Till then, bye from Anup.